has caused a Twitter storm after moving to deny a story published by conspiracy blog Zero Hedge that it was on the verge of collapse. The Zero Hedge post in question was headlined, "The Deutsche Bank Death Watch has taken a very interesting turn," and opened with the line, "The biggest bank in Europe is in the process of imploding, and there are persistent rumors that the final collapse could happen sooner rather than later, likening Deutsche Bank's travails to that of Lehman Brothers before it collapsed." The Zero Hedge take presented the giant German bank as a zombie institution on the brink of a catastrophic ruination that will bring down the entire financial system. Zero Hedge has past form in this kind of trolling. The media bias fact-check website bills the site as an extreme right bias conspiracy website. All the more remarkable than to see Deutsche Bank's social media team deigning to issue a rebuttal which served only to add a sheen of legitimacy to the Zero Hedge line. Just like we witnessed with Lehman Brothers, there is always an effort to maintain the charade until the very last minute. The bank itself seems untroubled by its troubled asset unit. Speaking during the third quarter investor call, CFO James von Moltke said, "The risky portfolios have now been de-risked and the portfolios weathered down." In future, von Moltke said portfolios in the CRU should be easier to manage and there should even be a relatively small revenue contribution from the unit between now and its closure in 3 years' time. Deutsche's shareholders need to hope von Moltke is right. They also need to hope that the 1,500 front office people still working in Deutsche's CRU don't disappear before Deutsche wants them to. Rival banks have already been picking off some of the top talent, and there were suggestions in the summer that teams were becoming so thin that Deutsche would need to hire some more traders for the unit soon. With pay in the CRU averaging just 60,000 euros in the first 9 months of 2019, this may be easier said than done. It should have been the high point of its global conquest. In 1999, after a series of acquisitions, in terms of its balance sheet, Deutsche Bank rated as the biggest bank in the world. In actuality, it was the beginning of its downfall. Today's Deutsche Bank is but a shadow of its former self. Its share price at $144 in 2007 is now less than $10. The largest German bank is now smaller than the second largest French bank. The outlook is so grim that Germany's federal government is alarmed. It fears that the Frankfurt institution is a prime candidate for takeover, and that the fourth largest industrial nation in the world will soon be lacking an internationally successful major bank. Hence, the possible merger with Commerzbank to save whatever might be left to be saved. The recent history of Deutsche Bank is a history of bad decisions, missed opportunities and scandals. To understand its decline, one must first consider its rise. From the very beginning, it has always been something more than just a normal bank. In the post-war years, CEOs like Hermann Joseph Abs enjoyed intimate links to political networks and were valued advisors on fiscal matters. Under Chancellor Konrad Adenauer, Abs would even take part in cabinet meetings. Plus, Deutsche Bank held considerably equity stakes in German industrial corporations such as Daimler and Krupp, making it a critical player at the heart of corporate Germany. When the globalization and deregulation of financial markets eventually reached Germany in 1980s and 1990s, Deutsche Bank changed its business model. It saw how much money American and British banks were making in capital markets with bond trading, currency hedging, and interest rate transactions, and wanted to join the party. In 1990, Deutsche Bank bought the British investment bank Morgan Grenfell, and 9 years later the American trading house Bankers Trust. There was just one problem: the market was already divvied up, and getting one foot in the door required Deutsche Bank to become especially aggressive. During his time in real estate, Donald Trump was still getting loans from Frankfurt when the American banks would no longer lend to him due to his high amount of debt. Deutsche Bank became deeply involved in the controversial shopping of American subprime mortgages during the real estate boom at the start of a new millennium. When the bubble broke in 2008, these adventures ended in heavy losses and costly legal disputes. At this juncture, a second poor decision was made. Other banks will quickly recognize that the crisis will permanently transform the financial world. They adopted their business models to the significantly more rigorous regulatory environment. The Swiss financial services company, UBS, largely retreated from commercial transactions to concentrate instead on more stable realms, such as asset management. One link describes how money deposited in a bank becomes a liability for that bank because depositors can decide to withdraw their money. Banks take your deposited money and loan it out to customers, and the loans become assets for the banks. When a bank is known to be in crisis, as Deutsche Bank is, the risk of depositors take out their money obviously grows. Historically, when faith in a bank is dying, depositors will line up for paper currency as they withdraw their money. If the rate of withdrawals is severe enough, it causes a classic bank run. It is my opinion that in this modern digital age, the risk of a currency bank run crisis is not as great as the risk of a massive digital bank run wherein large depositors can quickly empty a bank of its liquidity by digital withdrawals and transfers. It is clear from the warnings in the first 4 links that Deutsche Bank may be facing just such a crisis. The failure of a large money center bank is bad enough, but when the bank is one of the biggest players in the global derivatives markets, it also creates a risk of triggering a global crisis in the massive derivatives markets. One of the links cites famous investor Warren Buffett as declaring derivatives to be a weapon of massive financial destruction. If Deutsche Bank lacks the funds to honor deposit withdrawals and derivative settlement contracts, the global financial system will be at immediate risk. I'm not a financial analyst, so I urge you to read the first 4 links on the subject. You can also do a web search on this subject and find numerous articles from the financial media warning about the global financial risks posed by Deutsche Bank's woes. Some articles about this crisis discuss whether the European Central Bank or the German government will bail out Deutsche Bank in the event it collapses, much as the United States government and the United States Federal Reserve Board teamed up to bail out big American banks in 2008. The second link especially discusses this possibility, and it warns the euro currency itself may be unraveled if Deutsche Bank collapses. If the euro currency itself has an existential crisis of global confidence, it puts the entire eurozone and even the EU in jeopardy. The European Central Bank and the German government have a disadvantage that the United States government and the Fed did not have. The United States government and the Fed were able to use United States dollar-based tools and actions to bail out and stabilize the global financial system. This was possible because the United States dollar was the global reserve currency, so massive liquidity could be created out of thin air. The euro has no such global reserve currency status, so European banks cannot create a virtually limitless amount of money to infuse into their financial system as the American authorities could do. Deutsche Bank is not the only global financial risk at present. The banks in Lebanon have been closed as part of national instability there, and the bank run is feared in that nation when they reopen Fifth Link. Whether a financial crisis erupts in Germany, in all of Europe, Lebanon, or wherever, the Sixth Link details that central banks are running out of tools to respond to a major financial crisis. Most of the idea, comment, information, and criticism containing in these videos have been created by Daily News Report. Before making any important investment decision, use the information contained in these videos as a starting point for conducting your own research. If you make any investment or legal decision, it is advised to consult an expert before making this decision.